Gold prices tumbled Wednesday on strong U.S. inflation data, but the precious metal then rebounded towards $2,900 per troy ounce after President Trump demanded for the first time in his new term of office that the Federal Reserve cut dollar interest rates, directly contradicting yesterday's testimony to Congress from Fed Chair Jerome Powell. "Interest rates should be lowered," tweeted the celebrity real estate mogul on his TruthSocial platform, something which would go hand in hand with upcoming tariffs. "Let's rock and roll, America!" Trump repeatedly called on the Fed to slash the cost of borrowing during his first term in the White House, attacking Powell for not being a low-rates guy. Powell yesterday told Congress in his semi-annual testimony on monetary policy that the Fed is in no rush to cut borrowing costs further following last year's 1 percentage point cut from the highest U.S. interest rates since 2001. Chosen by Trump in 2017 during the Republican president's first term, Powell is due to keep leading the U.S. central bank until May 2026. U.S. inflation accelerated last month to 3.0% per year, January's CPI index said today, with the cost of living excluding fuel and food rising 3.3% from 12 months before. That reversed December's drop to the slowest pace since April 2021 and put core U.S. inflation 1.3 percentage points above the Fed's official target. Gold priced in the dollar spiked as low as $2,864 per troy ounce on that inflation data, erasing the last of this week's earlier 2.6% leap to fresh record highs. But it then rallied to $2,690 following Trump's comments. The gap between New York COMEX gold futures and London gold prices, meantime, held around $20 per troy ounce, sharply below the tariffs threat-driven spike to $50, which has driven a flood of bullion shipments into the USA. Following a surge of gold imports into New York, it seems likely that the dislocation between New York futures prices and the London OTC market is nearing an end. Reuters quotes John Reed of mining industry data, lobby and marketing group the World Gold Council. As the next few weeks pass, queues getting gold from the Bank of England's vaults should diminish, easing an apparent shortage of liquidity in the London market. Please like this video and subscribe to our channel.